Hi, this is our second of our Everyday Economics series. Again, I am Dr. Alvin Ang of the Ateneo de Manila University Economics Department and Director of its Economic Research Center. Today, I'll be talking about the three economic balances that determines economic direction. Marami pong kailangang aralin sa economics, but in determining our investment decisions, especially yung long term, yung tinatawag na looking forward, we need to understand three economic balances. Ayoko pong masyadong gawing complicated, but there's no way to be able to explain these three economic balances but to use some basic algebra. So kung may nakalimutan na po kayo, babalikan natin ng konti. Actually, hindi nga algebra yun, parang plus minus lang. Right. But let me first put this in context. A lot of people think that yung economics is always based on para lang sa individuals. But actually, the goal of economic activity is really improvement of the standard of living of people. Okay? Sa simple and most easy to understand context, ang ibig sabihin ng standard of living is happiness. Kaya nga mga politiko ginagamit yun. Gusto ko, happy ka. Ang ibig sabihin nun, nag-improve yung standard of living mo. Okay? And to be able to make people happy, meron three things that government or any economic activity should respond. Unang-una is to make a lot of jobs available. Second is to address rising prices and to also address inequality. Now, people think that these are problems of government alone. Hindi po, no? This is a problem. These are problems that affects all of us. Therefore, it is not limited to government solving it. It involves all of us. Now, to be able to understand why these problems persist, government planners and big corporate planners look at three economic balances to be able to say na itong mga challenges of society are being addressed. These critical economic balances are the fiscal balance, the balance of payments, and the savings and investment balance. Okay? The fiscal balance, yun po yung most of the time we hear of as the budget deficit or the budget surplus of the national government. The balance of payments talks about or actually predicts the direction of our international reserves and therefore the price is the exchange rate. The savings and investment balance naman talks about the direction of how much money is needed by the economy to create jobs and therefore its price is interest rates. So all of these three are very important in decisions made for investments. Any imbalance in the three will cause a movement of financial and other resources. So that means if you understand these three very well, you will know where to position your resources because if there is an imbalance, that is actually for some an opportunity to earn more. At dun naman sa iba, if you're tied up there, then your losses will become bigger. So dapat naintindihan natin where these three or where the imbalances are coming out of these three contexts. Now, I would like to give you some basic equations in economics. Okay? So simple lang ito. In economics, we always say your income, which we use the symbol Y, is equal to your consumption plus your investments. Tingnan po natin why. The logical basis of this is that whatever we earn, we either consume or some of it gets invested. Okay? So, may question, what if you have no income? You will still consume. Therefore, you have negative income in that case, right? So this equation holds true whether you have income or not. Okay? So that's why the base of all economic activity is having an income. Kaya kanina, kung babalikan natin, the three economic problems, they all refer to income. So So that's the basic equation. Now, this same equation, your income is equal to your consumption plus your investment. But where will your investment go? Hindi ba? If part of your income is not consumed, then you can invest it. Therefore, if you can invest it, your investment is also your savings. Kaya, if we think about it, investment is actually equals to savings. So yung nai-invest ng society is actually the savings of people. So if people do not save, there is nothing to invest. So part of what is earned is consumed and another part is saved. So if we combine the two equations we have earlier, sabi natin, your income is equal to your C plus I, consumption plus investment. It is also the same as your savings plus your consumption. So it means that you're simply, if we cancel, yung tinanggal natin yung consumption, di ba? Sa algebra, you can cancel both sides. Ang maiiwan lang sa'yo ay the identity is I and S. Okay? So if we rewrite it, ito na yung magiging picture niya. If you subtract your income from your consumption, what will be left is your income, your investment and savings. Now, siguro, some of you, if you remember anything from your college economics, this equation would have been one of them, which is your y is equal to your c plus I plus g plus x minus m, equation number 5, which means that all income of all people, okay, which we call today complicatedly as GDP. GDP is simply just the addition of everyone's income. Okay? So everyone's income is either consumed, C, is either invested, tapos may sumaling two more sectors. One more sector is government and the international sector, which is export less your imports. So if we now make this little complication to our equation, since not all income are not consumed, no? Kasi may tax. Kung may sinali kang government, may kailangan kang kita yung gobyerno. Government cannot spend without earnings. So, what is really happening is your income is equal to your disposable income, YD, plus TX, which is taxes. So, in reality, taxes is taken out and only disposable income is left. All right, so equation 7 now tells us that your disposable income is equal to your true income or your gross income less your taxes. So if we now go back to our original equation in equation 3, sabi natin income is equal to consumption plus savings. Actually, that is no longer true because may tax na. Kaya YD is equal to C plus X plus S. So if we combine that now, yung equation 6 and 8, this is what it will look like. So your consumption plus savings is equal to your disposable income, which is equal to your income minus your tax. So if we rewrite that, medyo nagiging komplikado ng konti, no? So your consumption is equal to your disposable income minus S. So nilipat lang natin sa kabilang side, di ba? Is equal to your income minus tax minus savings, right? Nakakasunod pa kayo, no? So mamaya pagka natapos to, balikan ninyo, right? So if we go and substitute it to the big equation we have kanina, yung y is equal to c plus I plus g plus x minus m, this is now what it will come out, which is the savings, investment balance, fiscal balance, and trade balance. So if we rewrite y is equal to y minus tx minus s, which is y minus c, di po ba? And then minus s plus I plus g plus x minus m, nagkaroon tayo ng equation number 10, which is savings minus investment is equal to G minus TX plus X minus M. X minus I is, pag tinanggal mo siyang simple equation, S is equal to I. Pag tinanggal din natin yung G is equal to TX, means G is government expenditures, it should be equal to the taxes they collect. X is equal to M, whatever we export should be equal to what we import. So yun po yung three basic macroeconomic balances. And as you will see, the whole government, the whole corporate private sector, they want to see these balances at least na nangyayari. Because if they are in imbalance, especially huge imbalances, they would cause more problems to everyone in society, whether government or private sector. Now let's look at data. Totoo bang balance ang savings and investment sa Philippines? Remember what I said earlier, what we can only invest what we have saved. So if that is true, the relationship should be that they are equal. But as you can see in this chart, right, the red line there represents gross domestic savings, or whatever has been saved by everyone in this country. And then the blue line above that is called gross capital formation, meaning, or in a technical term, yun nung investment. So that means that the blue line represents investment. So they are not equal in reality. There is an imbalance, meaning investment is greater than savings in the Philippines. So paano nangyari yun? If yung nasi-save is lower than what is being invested, then it implies that somebody else savings is being used in this country for investments. Sino kaya yung mga yon? That gap could be investments or savings by the OFW and foreign investors. Meaning, yung kulang ng nasi-save ng locals are pinupunuan ng mga OFW savings and then foreign investments. Why? Because the Filipinos has the lowest savings in all of Southeast Asia. Okay? Napakababa ng savings natin. Look at this chart comparing the Philippine savings rate with comparable countries and even large countries in Asia. For instance, pag tignan mo, obvious, kita kaagad, the Philippines is a low-cost housing compared to the buildings around it, right? Look at the savings rate of the Chinese, right? China, umabot na sa 50%. So for every 100 pesos they earn, 50 pesos is saved by the Chinese. Tingnan mo rin sa Singapore, the same thing, right? Hong Kong, Malaysia, but look at the trend. Bumababa lahat, nagiging magastos din ng mga tao, at least in these other countries. But it's okay. All of them have saved at least in the 20% or 30% level. Ang Philippine savings rate has been stagnant at about 15%. So for every 100 pesos, 15 pesos lang ang nasi-save natin. And it has not increased over the years. And that is why the Philippines is dependent on foreign investments and OFW savings. And kung titingnan mo naman, yung investment that comes from abroad, are they large enough to fund the country's savings and investment gap? Actually, sad story pa rin. Look at the Philippines investment na nakukuha from abroad. We have one of the lowest investments that we get from abroad. Look at China. No, para tayong tayo actually ang lowest diyan, no? Para tayong rice fields, no, compared to the buildings around us. All right? Now, let's go to the other balance, which is the fiscal balance. So, in that balance, what we're trying to establish is that the government expenditure should be equal to the taxes collected. At least, no? At least man lang. In reality, government does not need to have surplus or savings because dapat what they collect, they spend. That's it. No, ganun lang. But in our story, we have always been in a deficit. That means we always spend more than what we collect. I mean, at least the Philippine government. Just like any other entity, even if you look at yourself, kung gumagastos ka ng mas malaki kaysa sa kita mo, okay lang as long as you are able to manage it. But if the deficit becomes too big and too large, you will have a problem. Okay? Tingnan natin. This is the trend in the last decade. The expenditures, the blue line is always greater than the red line, which is your revenue or what you collect in taxes. And the yellow bars below it represent your deficits. No? Deficit natin lumiliit pero hindi tayo nagkakaroon ng surplus. No? What is the most acceptable level of deficit? According to theory, it should be at least 3%, only 3% of GDP. Kapag sumobrang laki na yung deficit natin, pag more than 3%, that is dangerous because that means government has either to borrow more, which will imply higher taxes in the future. So dapat 3% lang. Okay? If the GDP is growing every year, ang nakakatakot din dito, the value or the actual amount of that 3% is actually large. So sa ngayon, pinag-uusapan natin 3%, but if you look at data, they are already in the trillions. No? So what is the implication of a large deficit? It will force the government to go to the debt market. Okay? And when the government goes to the debt market, using instrument called securities and treasuries, nagkakaroon tayo ng challenge dyan. Why? Because government securities or government treasuries are what is known as the risk-free investments. Okay? Ano ba ibig sabihin ng risk-free? Meron palang ganon, no? Risk-free. That means if you put your money there, whatever happens, you will get it back. It is risk-free because government is always expected to pay its debt. Why and how? It has the power to print money. So kung halimbawa mukhang nangihingi mo na yung investment mo, napakadaling mag-print ng pera to pay you back. So that is why it is called risk-free. Now, this is important, no? Yung risk-free. It is also the opportunity cost for private or any investor. For instance, if you are a stock market investor and the government risk-free rate has reached, let's say, 10%, that should be your minimum to be able to stay in the market. So if the market will not give you a 10% return, dapat lilipat ka ngayon sa treasury bills, no? Kaya tinitingnan natin, no? Yung weekly auction ng stock ng treasury bills, ino-observe yan ng stock market. Kapag pataas ng pataas ang government securities, yung rate niya, it pulls liquidity out of the stock market to go to the government securities. Kaya ang government din, they do not issue too much debt. Pagka masyadong malaki yung inuutang nila, wala nang magbi-business. Wala na ring mag-i-invest sa stock market. Lahat tayo magiging aasa sa government. And did that happen? Yes, it happened in the 80s. And that's why the Philippine economy almost collapsed. Because almost every business would just rather put their money in government securities and slip it out. Anyway, siguradong mababayaran ka. But in recent years, this is the story. Talagang hindi na malaki yung borrowings ng government. And that has led to treasury bills falling. Okay? Bumababa siya. In recent memory, our T-bills had always been double-digit. But from 2010 up to the present, we have not breached the 10%. Even when we had high inflation in 2018, umabot lang siya at most at about 6% yung 91 days. So it was able to bring down the cost of borrowing. Okay? So low interest rates is very important because it causes people to look for other investment opportunities. They are not going to stay with government securities. You see, ang layo ng pinuntahan natin. We were just talking about the balances. Now you see the implication. If government has too much debt, it will cause high interest rates and cause people not to invest. Now, for our last balance, it's called the export or the trade balance. So export should be equal the imports. Now, this is important because the balance determines the fundamental value of the exchange rate. No? Marami nagtatanong, ano ba talaga dapat ang exchange rate? The exchange rate, if it's not controlled by the government, it's determined by the difference between the export and imports. So let's look at the past movements of exports and imports over the last decade. You can see that imports have grown so high in the last 2 years. Malaki po yung gap. That means our imports is so much greater than our exports. Is it good? Relative po yung good and bad dyan. But what it is telling us is that we are needing more dollars so that we can pay our imports. So if we need more dollars, that implies that we need to produce more sources of dollars. So tignan po natin. Look at the exports of the Philippines. A lot of people up to today do not know that the main export of the Philippines is not any agricultural products, but electronics. Not specific electronics, but components of electronic products. So, for example, any of the gadgets we are using today, they are at least about 10% made in the Philippines, right? Because of the electronic components. At the same time, our most important imports are also electronics, because what is happening is that we are part of what is known as the global value chain. So component parts made in China is passed on to the Philippines to complete the parts and then sent to Malaysia, for instance, and then go back to China for completion. So yun po yung process, right? And so if the deficit is becoming larger, then that means our export is less than our imports. In that case, there is a pressure for the peso to depreciate. Ibig sabihin, we need more dollars to pay for the same amount of imports and vice versa. Pero pag yun lang ang titignan natin, the peso should have already depreciated. But in the recent months, in 2019, for example, hindi naman nagde-depreciate yung peso because there are other factors than exports. We also have the BPOs, which we are paid in dollars, the OFW remittances, and tourism. No? Pag pumapasok yung tourists, they bring in dollars. The OFW, they send dollars, and the BPO services are paid in dollars. So they add to your foreign exchange. Plus, if you are a very active participant in the stock market, you will see this correlation that when the stock market reaches higher levels, the peso appreciate. That means ang dami palang foreign investors naglalaro sa Philippine stock market. They put in money, the peso appreciates. You can notice when the market goes down, the peso depreciates. So lumalabas yung foreign investors. And this is why this webinar is very important. This is to encourage you that the foreigners should not dictate our markets. Dapat we Filipinos should be investing in our own markets so that it's not only affecting our markets, it's also affecting our currency. We can help make our day-to-day currency stable by investing in our own market. Tingnan niyo po itong data na to. This is from the Philippine Stock Exchange. Look at the volume. Pag bumababa yung foreign buying or yung foreign selling yung nasa ilalim, the market goes down. This is a clear indication that even if the Filipinos are now playing or are now investing in the stock market, we are still dominated by foreign buying and selling. So this is my last slide, and we're going to talk about international reserves and import cover. So all this time na maraming dollars na pumapasok sa Philippines, for what is that purpose? So tingnan natin yung bar na blue. You can see that the blue bars have reached level about $85 billion. That is the amount of dollars our government is keeping. That means yan yung meron tayo for use in our economy. It is important, however, to make it useful by comparing it to what that dollars can do to our economy. So you can see a red line there being tracked. Ano ba yung red line na yan? The red line represents the import cover or how much that dollar reserves we have can pay in terms of imports. So kanina nakita natin the imports are getting larger. So if the imports are getting larger, can we pay for it? So how do we know we cannot pay for it? If the reserves is below 3 months, no? Kung halimbawa below 3 months na lang ng imports ang meron ka to pay, then most likely you cannot pay your import bills in the future. So that's when that happens, we have an situation called a devaluation. No, the government has to revalue the currency. The last time nagkaroon tayo ng devaluation was in 1998 when the peso was devalued from 26 to $1 to 40 to $1. What happened? Because our reserves had gone down to only 2 months. No, 2 months na lang ang kayang bayaran. Today, at present, what we can do is still pay about 7.5 months of imports. So at least, kahit na lumalaki yung imports natin, our economy has the capacity to pay our imports. And with that, the three balances now gives us a perspective. These imbalances helps us to understand that they are not on their own. We have to look at also different factors that will explain why, if there is an imbalance, the economy continues to be strong and move in the direction where we expect it to be. That's it for today. Thank you.